We got some breaking news here from the Fed releasing the results of its second round of bank stress tests. Brian Cheung has those details for us. Brian.
Hi, Shauna. Well, the Federal Reserve releasing the results of its second round of stress tests. It had begun its first round of stress tests earlier in the year, but the big headline from the Federal Reserve that as part of those stress tests, it's going to change its limitations on the banking industry's ability to pay out capital. So if you recall, during the third and fourth quarter of this year, banks could not do any sort of share repurchases. The Fed is now allowing the largest banks in the country to again resume its share repurchases with a caveat. So now the Federal Reserve says that the largest banks, think of JP Morgan Chase, Citigroup, Wells Fargo, those likes, they'll actually be able to pay out dividends in addition to share repurchases as long as that's capped below the level of income that they have. So another way of kind of rephrasing this is that banks that are more profitable will have a little bit more flexibility under this new change to pay out their capital, whereas banks that don't make as much money will continue to be limited. The Federal Reserve in its stress test found that using two hypothetical scenarios, banks did appear to have decent levels of capital based off of two hypothetical scenarios that they had laid out. One where the economy has a deeper recession, but it recovers faster. And then another one where it has a shallower fall, but actually has a slower recovery. The Fed Vice Chairman of Supervision, that being Randall Quarles, had said in a statement that the banking system, quote, has been a source of strength during the past year. And today's stress test confirmed that large banks could continue to lend to households and businesses even during a sharply adverse future turn in the economy, end quote. But I do want to note, just kind of as a side bit, that it was not a unanimous decision when it came to this capital distribution change. Lael Brainerd, who is the lone Obama appointee at the Federal Reserve, dissented against this decision. She would have preferred a larger ban on the types of capital distributions that banks can do. She again voted against that. But again, the big headline from the Federal Reserve, they will allow banks to resume share repurchases under a certain limitation, that being the big story from the Federal Reserve release just a few minutes ago. Shauna?
All right, Brian, thanks so much. As we can see, the banks stocks here getting a boost on the heels of that news. Taking a look at some of those names, Bank of America, JP Morgan, both up just around 3%. We're also seeing Wells Fargo up around 2.5%. Goldman Sachs and Citi are also in the green on the heels of that news. All right, Brian Cheung, thanks so much.